Hello, it's Martin Straith, founder of Trend News, which publishes the Trend Letter and Trend Technical Trader. When I started Trend News in 2002, my main objective was to help people become better investors. So in keeping with that objective, we started our free Market Musings publication, and today we are presenting our first training video. This is also free, so you're welcome to send to any friend, colleague, relative, anyone who you think would benefit from it. Today's session is called Maximizing Your Gains, Minimizing Your Losses. From early 2000 to mid-2002, the NASDAQ crashed over 77%. Unfortunately, most investors had no exit strategy, no plan to get out. Most investors rode the crash all the way down. Many of them finally selling at the bottom. Albert Einstein defines insanity saying it's doing the same thing over and over again and expecting different results. In 2007, once again, most investors had no exit strategy. In 2007, the S&P 500 lost 57%. So in a span of about 6 years, many investors had losses of over 75% in the tech bubble crash and over 57% in the credit market crash. Unfortunately, most investors sell their winners too soon and hang on to their losers too long. To be a successful investor, you need to be patient with your winners and impatient with your losers. To us, there are 5 keys to success. Take responsibility for your investments. It's your money. Take control. Don't just rely on your financial advisor. This is your money. You need to understand what's going on. You know, read the Trend Letter or some publication that gets you some information of what's going on in the world. This is a global market. There's capital flowing all over the place. We've got global tensions going on. You need to understand how that affects your investments. Before you buy any stock, be prepared to be wrong. Have an exit strategy. Decide before you buy what is the maximum loss you're willing to take before you sell. So it might be 5%, 10, 15, 20. Understand your risk tolerance. Also understand your sleep factor. If you can't sleep at night because you're worried about your stocks, then you should be having tighter sell stops. You know, you don't want to be worrying and fretting and having ulcers because of the stock market. If you hit your sell stop, sell it. Do not talk yourself out of selling. Take your loss and move on. If the price goes up, continue to raise your sell stop. All right, we've got a good example here of how sell stops can really work for you. In August of 2012, we made a recommendation to our subscribers to buy Kaminak at $1.66. This is a junior miner, volatile, but again, potentially good high, but who knows? At the time, it was $1.66, and the reason that I haven't really got time to go into the reasons. Basically, our models, which look at all kinds of indicators, just triggered that, you know, we've seen a bottom formation. There's a whole bunch of other reasons, but our models flash, this thing's due for a good run here. But before we sent out that recommendation, we just said, well, what is our max that we're willing to lose if we're wrong? So we set a 15% sell stop. Meaning that at $1.66, if Kaminak went down below $1.40, we sell. No if, and, or but, we sell. We don't question it. You know, sometimes it might bounce back up, but that's the rule. 3 weeks later, turned out Kaminak had a nice run. So it bumped up to $1.94, and that's 16%. So 16% in 3 weeks, many investors would sell there, saying that's a very good profit, and it is. The problem is, you know, if our motto is maximize gain, minimize losses, are we maximizing the gain here? Are we giving this stock a chance to run? We're not. But what we want to do is we want to minimize potential losses. So we started with a 15% loss that we're willing to accept. Now we're up 16%. So what we did is we just raised our sell stop to 15% below the current price, which is basically what we bought it at. So now our worst case scenario is we break even. Our best case scenario is we don't know. This could be it, and we missed it, and we come back down, or it could just go to the moon. So to us, we just minimize our loss here, cut the losses. So now we have a zero loss here, potential good run forward. 1 week after that, look at this, Kaminak went parabolic. I mean, it had a huge run up here. You know, now it went up to $2.41. So we're up 45% in a month. Now again, some people just say, well, hell, I'll take it, 45% in a month. And you know, I don't blame anybody for doing it. To me though, what we look at is we've had stocks go up hundreds and even over 2,000%. And if we just bailed on these, then we would never have realized those great gains. So these are the kind of stocks that can go up massively. So what we did is we go, well, we're going to raise our sell stop, but we're also going to tighten it. So we do expect that this thing's going to get, you know, it's getting parabolic, it's probably going to come down, but we don't know. I mean, it could go another 20, 30% before that happens. So what we did is we just, instead of a 15% sell stop, we said, well, let's move it up to, and I think we picked 8.5%. So our new sell stop now was $2.20. So again, so now we're sitting here, if it goes down to 220, well, we walk away with that profit, locked in. So we bought it here, we've moved our floor up, and so this is the limit that we would lose now. So it's just really a matter now of how much profit are we willing to give up. Turns out October 8th, Kaminak did stop out. It didn't stop out at 240, that's a misprint. It stopped out at our 220. So it went up to 240. It came down, it tried to break a new high, couldn't do it. It tried again, couldn't do it. Tried again, almost did, but couldn't hold. And then it came down. So our discipline is, we hit our sell stop, we sell. So we walked away with a 32% gain in less than 2 months. But the most important thing here on sell stops is that a lot of people would say, okay, it's 240, it came down, oh, well, I'll sell it when it gets back to, you know, sits up there. Well, guess what? It never did. And what so many people do is they think that the stock market owes them that price. I'll sell it when it gets to 240. Well, it's 220, then it's 210, then it's 2, then it's $1.50, then it went down to $1. Many people would still own this at that point with big losses. So rather than walking away with a nice profit in 6 weeks, basically, they sitting at a big loss and hoping and praying that the stock goes back up. All right, in summary, always have an exit strategy before you buy. Decide the maximum you're willing to lose before you buy. Some recommended sell stops that we use, if it's a conservative stock, meaning very low volatility, 5%, maybe 10, higher risk, you got to give it a bit more room. Very high risk, very speculative. These things bounce around a lot. I mean, these things can bounce around 20, 30% in a day. So these ones you've got to give them a little more room to run. These are the stocks that could give you 1,000% gain, and it could stop out very quickly too, either way. If the stock hits the sell stop, sell it. If the stock heads higher, continue to raise your sell stop. All right, hope that was of some benefit. If you are not a paid subscriber and would like to be, simply go to thetrendletter.com and hit the subscribe button. All of our subscriptions, whether it's a Trend Letter or a Trend Technical Trader, they all include a 90-day money-back guarantee. So seriously, yeah, you've got nothing to lose. 90 days, if you decide it's not right for you for any reason, just tell us and we'll give you 100% of your money back. All right, have a good day.